Hello guys, this is fairbinaryoptions.com. What we are seeing here on the markets or on the charts in front of us is the EURGBP pound 4-hour chart. And despite the sell-off today, or despite what Mr. Draghi is doing, I would like to point out that I would like to buy call options. As quantitative easing to come or not, this is a corrective wave, and because it is a corrective wave, I would say the first presumption here, or the first thing to look for, is this trend line. If you take it, let's change the color for it, let's make it a bit bigger, and then put it on the upside, and you see that this channel here has been respected quite nicely for quite some time. And I would say that the lower line here would actually needs to be something like this. So every time price came here and broke the trend line, or tried to break the trend line, even though we did have a new low and a new low and a new low and a new low, I would say that every time we had a rebound or a bounce, as you can see here, for the upper side of the channel. So this was the channel bounce to the upside to meet the other trend line. This was the channel bounce to the upside to meet the other trend line, and so on for 3 or 4 times in a row, like this. I would say that this time should be no different, and I would also like to watch a break of this trend line if it comes, and when it comes, as adding to the long positions, or adding to some more call options. The thing is that this wave here, this is a corrective wave. Being a corrective wave after a contracting triangle that acts as a reversal pattern, this one here, it means that the market at the end of this triangle here will offer strong support or resistance for moving forward. In this case here, let me make it black. In this case here, it was a strong support each time it came across the line here. So this has been support one time, support second time, again support for the third time, and now the previous support should turn into resistance, of course. And that being the case, even if it's going to go to the upside for only something like 20 pips or 30 pips, I would say that until our expiration date it will expire in the money. So let's write on the screen that what I'm looking here is buying call options end of week expiration date, right here, right now. That means that actually I'm buying the call options with expiration date being this Friday, when the US markets are going to close. And whenever you buy call options, you're looking for price to be bigger than the striking price. This is our striking price right here, 81.77, and we're looking for price to be bigger than the striking price at the expiration date. So actually, in order for this option to expire in the money, it needs to be, or price tomorrow for the New York close needs to be bigger than this 81.77. In terms of value at waves, I would say that from this moment of time, or from these highs, I would say the move to the downside goes into A, B, and C. And even though that, or even though this C wave here doesn't look impulsive, well, it is impulsive. I would say it is in the form of a falling wedge with in the shape of a terminal impulsive move. The falling wedge will most likely be the first wave being here like this, and A, B, C for the second wave, then the third wave, the fourth, and the fifth. In this scenario, the fifth will be the longest, so would not be correct, and therefore this should be something like the first, and then A, B, C the second, and then the third, and then the fourth, and then the fifth. Each way it should bounce higher. I would say that it is in the form of a falling wedge. If you take a trend line from here to here like this, and make it bigger, of course, let's make it red, and then to take this one from here to here, that would be the falling wedge broken to the downside, and now the price to rebound a bit. Thank you very much for being here. This is FairBinaryOptions.com, and all these analyses and recommendations are possible due to the help of our sponsor, Lioneye. Bye bye.